if you were going to hire someone that was going to build, 100,000 widgets, or 10 people, 100,000 widgets over the next 5 years, why in the world would you pay them the full 5 years today, right? Why not up your production, sell more product, and use the profits and increase revenue and increase cash flow from that growth to fund that equipment, right? And that's really ultimately what equipment finance allows you to do.
The following podcast is brought to you by Thryv. Manage, run, and grow your business all from one dashboard using one login. Small business runs better on Thryv.
Hey, this is Gordon Henry at Winning on Main Street. And this week we have a guest in an area we haven't explored before, equipment financing. Very interesting area. So welcome to our guest, Doug Houlahan. Welcome, Doug.
Thanks for having me, Gordon. Excited to talk to you and your audience today.
Yeah, super excited to have you. Doug is I think I got this right, Chief Customer Officer, CCO at ClickLease. Do I have that right?
Chief Commercial Officer. Yep.
Commercial.
Yep. So kind of all things revenue is basically what that means. So.
All right. Terrific. Even better. At ClickLease, a leader in the equipment finance space. We'll get into what that means in just a minute. ClickLease helps small businesses afford the equipment they need to start or grow business. Too often small businesses who need equipment must choose between either depleting precious cash, maxing out their credit cards, or going to a lender who requires they fill out mountains of paperwork. ClickLease is basically here to solve that problem, provides a streamlined, simpler system that works better for small businesses who need equipment and equipment sellers who want to sell it. They help commercial equipment vendors, dealers, wholesalers, all them sell more product by providing best-in-class financing solutions to small and mid-sized businesses. ClickLease has developed a point-of-sale financing solution specifically for what they call the micro-ticket market. We'll get into that, micro-ticket. And they provide equipment financing solutions, enabling small businesses to select their equipment and document and obtain electronic signatures, all within a few minutes. What should you, our listeners, get out of this episode? Many small businesses need equipment to get the job done, but the process of identifying the right equipment, arranging payment or financing, and gaining needed approvals is daunting. ClickLease may be the answer. So, Doug, welcome to the show.
Thank you. Great to be here.
So first, just tell us a little bit about yourself. How'd you get into equipment finance business? A little bit about your background and how you got here.
Yeah, I was a bit of a serial entrepreneur. I started a couple small businesses here and there, sold one, was always curious about being involved in small businesses. And I'd actually sold a business and was moving to California. And at some point in time, my wife had gotten out of the dietetics industry. She's in the nutrition business and started working for a large equipment leasing company at Gateway Computer. We were back in the Midwest. And I bumped into a guy actually while I was working at Wells Fargo trying to figure out what to do. And he was running a very small business at the time, and we hit it off. And the idea of from being an entrepreneur, starting a new business and helping small business and other entrepreneurs get the money they needed was really exciting to me and turned out to be just a perfect fit. We sort of have a joke in the industry that nobody leaves school and says, I'm gonna get in the equipment finance business, right? And I'm gonna lease equipment. That doesn't happen typically. So we all kind of find some interesting way that we fall into it. And I just met some great people, I think, who had a great service delivering capital to small business for the equipment they needed. And it's gotten in my blood. I can't imagine doing much else. And
that all happened. Give me circa what time?
That was about 22, 23 years ago. So I've been in the industry. Been in the industry a while now, so it's part of who I am today.
So you were at Wells Fargo, and then 22 years ago you had this meeting. And where did you go from? Where did you start in equipment leasing?
Yeah, so the company at the time was called Allegiant Partners Equipment Finance. Now it's AP Equipment Finance. They've grown, probably tenfold since then. I left them in actually 2008 when we hit the financial crisis, started a new finance company called Maximum Commercial Capital. So I founded that company with some partners, ran that to a nice size. And then I was fortunate enough back in late 2017 to meet a couple of the investors that had an idea there in the finance business. They have a commercial working capital company, a consumer rent-to-own company, and they wanted to be in the commercial equipment space. So they were sort of headhunting. We met each other, and the ideas that we wanted for delivering, capital to small business and what we thought the space needed, we really aligned. And it's really been a fantastic last 5.5 years of building ClickLease together, and we've accomplished a lot of what we want to. Still a lot more to do, but really excited about what we've built over the last few years.
Okay, so you guys launched around 2018.
I started commuting to Utah in January of 2018. Yep. So I actually live in Northern California. That's where I'm talking to you from today. And I had relatively young kids at the time, and I said, I will be there. I'm just not going to uproot my family for a startup right now. So I hop on an airplane almost every Monday morning, fly into Utah, fly home Thursday typically, and did that for the last 5.5 years. Cut back on travel a little bit lately, but it's been a lot of time. Spent a lot of time in airplanes. I was basically on a plane or in an airport every 3 or 4 days for the last 5 years. So
were you doing that during the pandemic too?
I took about 6 months off. So I did hit pause for 6 months. I remember walking into Oakland Airport. It was probably May of 2020, and it was an eerie feeling. I had to take a quick trip to Vegas for something. I mean, I kind of looked around both ways of the hallway, and there was not a body to be seen hardly. It was strange, but yeah, I got some miles in.
Got it. So you're in San Francisco, companies in Utah. Why did you select Utah? Was it just a great environment to build a company, or?
Well, it is. I mean, that is one of the benefits. It's actually where sort of we were leveraging some of the people and facilities that they had in place from the other companies. So those other companies are headquartered in Utah. Primary investor base is there. So that's where we launched. And it's a great, Utah has some good lender, rules and laws and regulations, unlike California. So it is helpful, but
I see.
Great environment. Yeah. Good people, smart people, lots of, good people to leverage. So we're tech heavy, super, they call it Silicon Slopes in Utah.
Yep.
A really strong group there to pull from, and a really great sales organization. If you want to start a sales business, Utah is a fantastic place to do it as well.
Yeah. So is ClickLease, would you call yourselves a finance company, a leasing company, a fintech company? What's the space you consider yourself?
It's funny. I'm certainly call us a fintech. We have some really great technology and great data, which allows us to do what we do, and really, I think, innovate in the space. But we had early on, we were trying to get a bank facility, and we have to borrow money to lend to people, right? So that's kind of how it works. We're a middleman deploying capital with our cushion in the middle to people the banks typically don't lend to, provide money to. And they asked us at the beginning, are you more of a tech company or more of a finance company? Because there's a lot of tech companies out there who will put a lot of money on the street and do it really fast. Problem is, they don't get it back, and that's why they kind of go away. So the secret is figuring out how can you effectively and efficiently put the money in people's hands and also get it back. So so I think we're finance people first, and we hire really smart tech people to help us make sure we put a good product in front of people from a tech standpoint.
Okay, so Doug, for our audience of small business owners and people looking at small business who probably have equipment needs but don't really know how all this works, how does equipment financing work, and what are some of the benefits that ClickLease provides that they might not find from some other lender?
I think I would expand that answer to not only, the small businesses that need the money. There's a lot of small businesses that are selling equipment, selling products that if they can provide a finance solution, a payment solution, can help sell more product and more payments. We're seeing that across the board today. I mean, there's so many people in the payments business because a lot of people, they want or need things for their business. And if you can take away the affordability question, it helps both sides, right? It helps the buyer and the seller to really grow their business. The real benefit, I sort of use a ridiculous analogy, sort of, if you want to call it that way, is, if you're buying a piece of equipment, and we like to focus on essential use business equipment, business that really either helps you make more money or save a lot of money in your process. Think of a manufacturing line, right? Instead of hiring 20 people, right? If you can buy a piece of equipment that can do the same amount of work, ultimately that's going to save you a lot of money. If you were going to hire someone that was going to build, 100,000 widgets, or 10 people, 100,000 widgets over the next 5 years, why in the world would you pay them the full 5 years today, right? Why not up your production, sell more product, and use the profits and increase revenue and increase cash flow from that growth to fund that equipment, right? And that's really ultimately what equipment finance allows you to do. And I think I'd really focus, from whether buyer or seller, if you're going to leverage equipment finance and other financing products, make sure that equipment does add a lot of value to you. We don't want you borrowing money for equipment that's not going to pay for itself many-fold over. Like that is a bad recipe for any business owner. But if you can buy a piece of equipment that can help you radically expand your business, right, and leverage, somebody else's capital to do it over time, use that cash you would have plunked down onto that equipment instead to, run your marketing, hire better people in operations, salespeople, right, to really support and grow your business, marketing, all the infrastructure you need. To us, that's really what the ultimate benefit is of equipment finance, is really that leveraging the your dollars and matching your productivity with the cash allocated to it over time. I mean, there's another thing to equipment finance. Some of the benefits in how it's a little bit different than a traditional loan or a traditional financing is really it's really a combination of both the value of the equipment and what you're getting, right? So when most underwriters, and we're a little different than a lot of them in our process, they do look at that underlying asset as part of the collateral pool, right? That helps make that a stronger loan, right? Because you got, credit, cash flow, collateral, right? Those are, and character. Those are kind of the 4 C's of underwriting that bankers go through over time. And that really good collateral helps the transaction, right? So credit and cash flow are always important when you're looking at how to attract financing. But equipment finance focuses heavily on the equipment you're buying, so that's part of it, and then that can help sort of lower the sort of the bar of the other pieces of equipment. And then there's tax benefits. You can finance typically the whole 100% financing, easier underwriting process. Traditionally, depends what you're buying, and of course the leverage, but. And then offering financing, the goal is to sell a lot more equipment. If you can give people an easier solution to put that equipment in their hands and take it home, we're hoping you can sell, more equipment to your customer base.
Right. So thank you. That explanation, I think, is a very compelling reason why people might want to finance their equipment as opposed to plunk down money themselves or use a credit card, which we all know high interest rates. But
Right.
What about ClickLease is so unique? Isn't it your process which is easier and simpler for the small business?
Yeah, and that was really, if you go back to 2017 and you look at what existed in time for commercial finance, we've, like I said, I've been in this business about 22 years, and we always said, we live by the golden rule: he with the gold makes the rules, right? So you could kind of put people through whatever process you wanted to and make them jump through hoops. And then on the other side, you look at consumer finance, how fast that's progressed. If with Affirm and Klarna and a lot of these, platforms out there, Afterpay, it's literally a 10-second process, and you can buy, a shirt or a pair of shoes or socks or a, Peloton bike or, what have you. You can, it takes just seconds. And there's a massive disconnect in that space, and there really didn't need to be. So that was our goal, really, was to bring that same almost consumer-like experience at the point of sale to the commercial space. And we're really one of the few in the commercial space that can do that effectively. So we do, we focus, you mentioned it briefly, on micro ticket transactions. That's primarily under 25,000. And really we have the ability to underwrite and finance, new businesses with tougher credit. And so really we picked all the hard things to knock out first, right? Because that's what nobody else really wants to do. Banks and traditional finance companies, it's really hard to do a deal fast for a small amount of money because of the cost typically involved. And like I said, we tackled all the tough ones first, trying to go upstream from there. That's a growth plan. But yeah, so our process now, really, you put your phone number in, it kind of recognizes who you are. You get you to confirm it, pick up, I think it's a total of 8 pieces of information that allow us to underwrite. And we provide instant decisions. So you can know right there if you're approved. And depending on who, what equipment dealer you're working with, you can sign documents within a couple of minutes and be done, point of sale or online. So it's really, really a unique process in the commercial finance world compared to, hours, days, and even weeks that you can, if you're working through a bank or somebody else, that kills a lot of sales and kills a lot of opportunities. So we try to make it really, really easy and efficient for both buyer and seller alike.
And most of this is happening online. I mean, I go to your website, ClickLease.com, and I just do everything you just described. You just put in the 8 pieces of information, and in 5, 10, 15 minutes, I'm going to know the answer.
Well, it's what we do is we partner. You can go to the website. What we do is we partner with a lot of, we have, thousands of dealers across the country that we help them sell more equipment. So whether it's on their website, if you're looking at a piece of equipment, you can click on that equipment. It has a ClickLease buy now button. You click on that and it's literally, you put your information, it's 10 seconds. It's 8 seconds on average, just a little under 8 seconds. So we make a decision in real time on if you're approved and you know what your payments are. There's a payment calculator. You can play around and say, hey, I got approved I wanted 8, I got approved for 15 or 20. What would my payment be if I bought something a little bigger, a little better? That's really, I think that's been a surprise is, a lot of the, the lessees, the customers we talked to have said, hey, I was actually to buy better equipment and more equipment than I expected to after my process. I thought it might be tough to get, this used piece of equipment or something. And ClickLease allowed me to buy really a better piece of equipment that I wanted that would make me more efficient, have more reliable equipment and have a better business ultimately. So we can do that literally within seconds.
And what are the terms like? What are the rates? What are the payback terms?
Yeah, so we average 39 months is kind of the average term. So, and that is how we're different than a lot of the, I'm going to call it fintechs that are out there. They're very short-term capital, and you can get money from a lot of those, but paying off a CNC machine or a big riding lawnmower or restaurant equipment in 6 or 9 months is pretty daunting, right? That's a big payment, right? And what we really focus on is matching the term of the equipment to really the life and the usability of the utility of the equipment that we're financing. So we'll go up to 60 months. Like I said, 36 to 60, depending on what, and people mostly have the option to choose what term they want. So if like, hey, I like this payment more than I like that payment, whether it be larger, shorter, quicker turnaround time, and then from rates, we do risk-based pricing from, very, high, bank type rates. Like, so we got borrow and mark it up, all the way up into, true startup, tough credit type 500 FICO stuff where you got to work kind of hard to get that kind of a score. So we have what, we call risk-based pricing. So we try to, match pricing to default rates, but we're super competitive through the spectrum.
Got it. And okay, so that's from the borrower standpoint. I wanted to also talk about the company that has the equipment that's looking to lease the equipment. So are many of them just finding the space, or equipment sellers have been doing this forever? This is old news to them. How new is this?
It's not new. They say leasing is the, like the second oldest, industry in the world. But it's really fascinating. Actually, we have conversations internally between makes and takes, right? So makes are people that haven't used financing in the past to sell their product, because it's intimidating. Traditionally, it's been very intimidating, because you have somebody, you might have somebody selling some welding equipment, right, or something like that, and now all of a sudden you want them to be a banker. Like, that just doesn't translate very well, and that can be extremely intimidating for both management and salespeople alike. And so that's what we would call a make, is taking somebody who hasn't used financing in the past and trying to get them to use it. And then there's the takes of people that have used financing historically in their sales process. There's a lot of really savvy companies that have said, hey, if we can switch this to a sort of a payment-based sales process, we're not talking about a certain dollar amount. We're saying, hey, we know this equipment can generate somebody 10 grand a month. So if you're paying $500 or $600 or $700 or $800 a month, I mean, it's kind of a no-brainer, right? To help us invest in that equipment. So people have picked up on that, and there's people that use it on 70-80% of their business. There's guys that are intimidated by it, and I think our goal is to make that process easy for everyone. We're trying to take the intimidation factor away from selling it and having finance discussions and understanding, hey, what do I have to do to get qualified? And wait, what's a P&L, or what's a balance sheet, and how do I get it to you, and what does that mean? And it's been intimidating. Like I said, we had the golden rule for a long time. He with the gold makes the rules, and we didn't always make it easy. That wasn't necessarily the top rule. So that's really what ClickLease does, is they make it easy to offer financing, put the control back in your hands. Because if you got somebody approved, you can have a much different conversation about selling that equipment than you can if you're hoping they can find the money somewhere.
Right. And in terms of your pitch to the sellers, have you been able to show that you grow their kind of universe, that sellers who might have had a certain number of sales before offering the leasing, that it increases, that it basically grows their business by making this purchase process so much easier for the customer?
Oh yeah, there's I mean, both, we have anecdotal evidence from some of our vendors and partners, both on average ticket size. There's data around, it's 40 to 70% larger tickets, because if they have the money. We have, if you go to our website, there's a testimonial we have where a guy's like, I was able to grow my business, significantly just because of this process. They make it so easy, right? Both, there's lots of things involved with the way we use financing. Is, hey, not only are, we helping you, basically sell it online by giving them the payment, making it affordable, taking that, that part of the discussion away, but it's also kind of the follow-up process. When you have somebody that's sort of just looking and they've applied, because our application process is very easy. Now you have all their information. You have their phone number and their email, and you can follow up and you can see what equipment they're, they're interested in. But no, that's, and I mean, you look at, like I said, you look at how Affirm and Klarna and Afterpay and all these other companies are coming on board, and a lot of these, a lot of these vendors, they might be paying, their financing partners 6 to 8 points, of their sale price, just because they drive sales that much, because they make it so much easier to afford the equipment that they sell more. So, I mean, that's, I guess, probably the strongest indicator is a lot of people are selling, are paying for the use of the financing. Now, on the opposite, we can actually, depending on how it's structured, we can actually pay a vendor, to leverage our platform.
If you're a customer, the end customer who's leasing the equipment, obviously they've got to pay it back with interest. The seller, are they paying you, or you're paying them, or how does that work? Please talk about that.
We don't charge any of our partners to use our product. So we talk about it sometimes, maybe we should, but and actually we have some partnerships where we can actually give them a point or two if and really that's in the sort of the take situation, is if they have somebody in place. Sometimes the value that their financing partner provides is really not much more than paying them, a few points on every deal that they do. So some people don't want to get away from that. But what we see is most of our vendors, the equipment dealers are saying, hey, I just want my customer to get the best deal, the most affordable equipment. Because clearly if we're paying them, we have to find out somehow to, get at least some of that back. So it just makes it more expensive for, ultimately for the end user. And that's not what most of the equipment dealers want. Is they want their customers to get the best deal, and we kind of use the analogy of we're babysitting their kids for the next 3 years. So they have their customer, right? They put them in our hands, right, to take care of it. And we have to treat them properly because we're an extension really of that service to their partner. So, we want to do everything we can to make sure they're happy with their product and the process. So as we babysit their children for the next few years.
Got it. Do you have like defaults or customers who don't pay? Is that part of the equation for you?
That's a big part of the equation for us, and
yeah.
Like I said, we did all the tough stuff first. So it's like I said, it's kind of the near prime and subprime. I think we do as good a job as anybody in the industry for balancing that risk. And our goal is to provide as many approvals as we can, to that equipment dealer. We want to help. I mean, everybody can do the bankable stuff. That's cookie cutter. That's commodity, right? That's easy to do. The banks want to give people money that don't need it, right? What we're trying to do, and what a lot of the newer fintechs and finance companies are doing, is alternative capital. We're trying to put money into the hands of the people that really need it, right? And that comes with risk, because you don't quite miss as much as you get it right. But I mean, there's a lot of misses, right? So that's why that cost of capital for those individuals is typically higher. But we certainly have a lot of delinquencies and defaults we have to deal with.
Got it. Yeah, interesting. And in terms of where you get your money from, do you deal with like one bank or multiple banks? Like where do you borrow from?
We have a large relationship that we work with, with the bank, and they have. I talked about underwriting and how it can take weeks. It's a process for us to get it right. They have to be comfortable with how we're going to get them paid back. So that's a whole that could go on for days and hours, that kind of discussion. But yeah, we investors and banks, we take money in and redeploy. So, and we're kind of that middle cushion. We add the additional collateral and cash flow to that business to make them allow the money to pass through the cash flow chain. So,
got it. Okay, we'll be back with Doug Houlahan from ClickLease right after the break. Don't go anywhere.
This episode of Winning on Main Street is brought to you by Thryv, the small business management platform that you and your customers will love, no matter where you are. Thryv helps you run your business, keep organized, and get paid faster, all from one login and dashboard. Thryv makes it easy for customers to find you online, instantly interact, and stay engaged. And with free unlimited support 24/7, there really is no comparison. Go to thryv.com/pod for a quick demo to see everything Thryv can do.
And we're back with Doug Houlahan. Fascinating discussion about his company ClickLease and this whole area of leasing equipment and the financing options available to small businesses. So if a small business doesn't use ClickLease, they don't choose you for some reason, what do they typically do? What are the other options that are most popular out there?
I think the micro ticket space is a little bit different than traditional. We are typically credit card competitors, right? So if they're not using ClickLease, with our average deal size of $10,000-ish. By the way, micro ticket, we go back to that. We do $500 to about $25,000. That's what we finance. We're actually in the process of looking to go bigger, but that's really where we started, because it's tough for a lot of people to do that. So a lot of business owners, they have $20,000 or $25,000 they can put it on their credit card and figure out how to take care of that. A lot less, with lines of credit and loans, but that is a portion of it, a small portion. But credit cards and Visa and MasterCard are our biggest competitors.
Got it. Yeah, makes sense. And in terms of what you make easy for people. I assume you're giving them better rates than they would be getting from their credit card companies, right? Otherwise, why would they use you? What is the catch? Is it just that you do a better job of assessing the risk? How are you able to do what you do?
Yeah, well, I mean, it's data, right? I mean, we have the right data on our performance, so we can do risk-based pricing. And I think it's, when you look at cost, it's like, I guess you think how are you talking about that, right? So there's opportunity cost of having that capital available for other things, right? So that's a cost that if you use your credit card, you may not have to invest, like we said, whether it's marketing, and Facebook ads, or however it is you grow your business. We think that's a big piece of what people are better people, putting your money into people over that period of time to keep them happy. I think what we do is it's two things. One, we give equipment dealers control at the point of sale, so people know they have the money to buy the equipment. So that's a huge benefit that we didn't even really understand when we started the business, right? And then also we give the the lessee, person using the capital, buying the equipment, the ability to really to budget, right? If they know, hey, I have a payment of $600, like I can set that, and I understand
right.
whether this equipment will make me enough money and or not to make that $600 many times over, right? So that's I think one is that consistency, and you think about what's happened. I mean, we got killed by it effectively. Is if you had bought, used your line of credit, 12 months ago or 15, 18 months ago, your cost would have almost doubled, right? That payment at that time, because of the variable capital rate. So we're providing also a fixed payment. So it doesn't matter what happens to interest rates, right? In this environment, truly our cost of capital has doubled in the last, few months. They have that consistent payment, so they can, like I said, truly budget and relate to that. And then we just make it really easy. I mean, it's really simple. So, you go through, you do that, that it's probably 2 minutes to apply, depending if you know your information, the pieces we ask, you get answered, and you do a DocuSign, a click DocuSign, with 3 signatures, and it's done. That's all you have. We pull your bank information at that time. So it's set up in the system, and we ACH your account the same day every month. And so you don't even think about it for, the next 3, 4, 5 years as you make that payment.
Right.
I think that's really what we do. And then, credit cards, you're managing that, payment in different pieces. And ultimately that, depending on how you manage it, can be a lot more, your total cost of ownership. If you just pay your 2% or whatever it is, that'll cost you a lot of money over time. So I think those are, probably the benefits of using like a equipment finance company versus just putting it on your credit card.
And are all of these situations where the lessee is, I don't know if you call it lessee, but the ultimate customer is buying the equipment, at the end of the day, they own the equipment, or are they leasing it? So like I lease my car, at the end of the 39 months, I hand the car back to the car company. But in my home purchase, obviously I bought the home, it's a mortgage. At the end of the mortgage, I own the home. So which is it?
Yeah. So they, well, it can be whatever they want. And I know that's kind of a funny answer, but we structure it so a very affordable, we're structuring with the assumption that they want to own it at the end of the term. However, not everybody wants to. So they make their, for example, if somebody says, I want 36 payments, it's structured approximately like they make 33 payments under the base lease term. Then there's the purchase option, which is, a amount we calculate, which is in the ballpark of 10-ish% of the value. And they can just make, if they choose to, they can make a few more payments, and then they pay off the equipment, and it's theirs, after kind of so many payments are made. So they absolutely have, we structure it with the assumption that they're going to buy the equipment, and almost everybody does, just goes through, makes a couple extra payments and owns it. So it's very clear, just like if you're leasing a car, it's not like 40% of the equipment cost. If you're buying a $50,000 car, you're not paying 20 or 25,000 at the end of the lease. You would be paying, 5,000 at the end of a $50,000 lease. So it's there's all kinds of legal and accounting stuff around leases. So that's why I'm probably talking a little bit ironic, but we structure it with the intention that we believe they're going to want to own it, but they don't have to. We get people that return equipment at the end of like, hey, I paid my base term. I'm done. I don't want this. Where do I send it? So.
Got it. We just have a few minutes left. Tell us a little bit more. Who are your typical customers? I think you mentioned before restaurants and some other categories. What would be your top 4 or 5 categories of customer?
Top 4 or 5, yeah. So we do a lot in what we call light industrial. So call it a woodworker, like a cabinet maker, a guy who runs a small manufacturing shop, metal fabricator, welders. Those are great industries for us, because that equipment makes them a lot of money. We actually do a lot of food trucks, food trailers, actually. A truck that you're driving all of a sudden becomes a lot more expensive, but a lot of food trailers do a tremendous amount of those. Automotive repair shops, you need diagnostic equipment, you need lifts, you need, tools, wheel balancers, that's a great industry for us as well. We do a lot of trailers. So guy that's, got a hauling business, a dump business, mowing, arbor, tree business. Moving,
all those lifts, all those lifts you see.
You think about guys who need, who are buying equipment that make some money that's, 15 to, up to basically $20,000-$30,000. That's kind of our, and then, for example, like restaurants, we're not doing like a whole restaurant build out, but if somebody's dishwasher blows up or their oven goes out or they need, new this, that, we'll finance, a lot of that as well. And a lot in the janitorial business and remediation, sanitation, we do, if you think about the floor scrubbers, drive along and, and they're sweeping the floors and cleaning and, it's printing business. We don't do trucks. We do a lot of trailers, but we don't do, and my very generic information around trucks is, I don't know that I want to, finance something for 5 years, a truck, with an engine in that's less than $20,000 or $25,000. The chances of that going sideways are pretty significant. So, from a repair standpoint, so the value in that equipment is hard to assess over time.
Got it. Interesting. Okay. What's next for ClickLease? Are you guys international? Where do you go from here?
So, I touched on it briefly. Where we go from here is we go up, right? It's interesting. We started, in this micro ticket space. We started at 15,000. We've gradually gone up to 25,000, and we've had a focus on the kind of the near prime and subprime, not the true prime customers historically. What we're doing now is really looking to go larger. So, we're looking for ways that we can go up, maybe up to $50,000 or $75,000, which will allow us to help out even more vendors and more dealers and more customers for larger exposure. So that's something that we're building out now. And then also looking at other ways, other needs. So, hey, we just financed somebody who bought, I'm trying to think, like we do some sign printing and manufacture, right? Sometimes if you get a big project, you might have $10,000 or $15,000 of consumables, materials you need to do that job. So, maybe looking at providing some short-term, inventory or working capital financing for that is also something we're probably considering, over time, so we can, we have all these great relationships, hundreds of thousands of customers and, thousands of vendors. If we can help them as a trusted partner to do more, I think that's a great next step for us. So. Yeah. Like I said, we all want to do more with our customers, right? The better care we take, of them, the more business we can do with them. And that's, I think that what we want to do is go deeper with those existing partners.
Yeah. Awesome. So I know you mentioned that sometimes people and customers go to the site of the equipment manufacturer and find you there. But they can also go and find you just on ClickLease.com, right?
ClickLease.com. Yep. You got it.
Okay. And that's just the process. They could go through the whole process right there and get approved.
Yeah, up at the corner, there's like an apply now, and then ask for, buyers or sellers, and, you go through the buyer process. We'll say it's best if you, and then if you go through that process, then we have to take you back and take you to a partner, talk about the way we underwrite. Equipment and the dealer are really important in our process, underwriting process. So it's actually, you have to kind of almost get re-underwritten when you find the partner you need, or, we love it if you come in and you have a partner, you want to introduce it to somebody. That's a
Yeah.
great way for us to grow our business. It's just, if you know who you want to work through, it's great to go for them. Or we can help direct you to some people that we work with as well. Happy to do that. But yeah, ClickLease.com is a great source to get started.
Yeah, awesome. Well, Doug, fascinating discussion, and I'm sure people listening would be interested in checking you out. So thanks for coming, and I hope they look for you and find you on the site.
Yeah, appreciate it. It's not always easy to make equipment finance interesting. So I think you did a good job of keeping it real. So I appreciate that, Gordon.
Appreciate it. And I want to thank our producer, Tim Alleman, our coordinators, DeEtte Barnett and Daniel Huddleston. They do a great job. And if you enjoyed this podcast, please tell your colleagues, friends, and family to subscribe. We'd love it if you'd give us a 5-star review. We really appreciate it. It helps us in the rankings. Small business runs better on Thryv. Get a free demo at thryv.com/pod. That's thryv.com/pod. Until next time, make it a great week.